Lyft shares are down 2%. Evercore ISI's Mark Mahaney says it remains to be seen if Lyft can sustain top-line growth while ramping profitability. He's keeping an inline rating on Lyft. But for Uber, DoorDash, and Shopify, Mark is raising his price target for all three. So joining me now is Mark Mahaney, head of internet research at Evercore ISI. Mark, it's great to have you on. And let's start right there. The takeaway, and I realize we get Instacart after the bell, which I don't think you cover. But the takeaway so far from the share economy, what is it?
Generally resilient demand trends, I think, Morgan. I think that's the right way to answer it. The strongest part actually seemed to be delivery. That showed up in DoorDash's results. They showed acceleration in revenue growth. And by the way, so did Uber. Delivery has been the star of the gig economy show so far. Mobility's, the growth rates have kind of held in, been pretty consistent, particularly in terms of the kind of the core metric, which is rides or trips. That's clearest with Uber. There's a little bit of a fade with Lyft, and that's probably the stock's underperforming today.
Okay. So what do you buy here at these levels on the heels of all these results?
Well, your prior guest actually pitched my favorite idea, which is Google here. Look, we've had a lot of run-ups in some of these high-quality names. There's very little dislocation in the space. I think Google still is. I think Amazon still is. Look, I like DoorDash. I think there's some great new elements to the story, and I think investors sort of underappreciate how large the TAM is and how low penetrated it is. Like these are companies that are still less than 10% of their end markets. If they execute well, you want to find the winner in those categories. I think DoorDash is a winner in its category. I think Shopify is a winner in its category, and I think Dash is probably too a winner in its category. So I like all three of them. I don't think any of them are back up the truck prices, but I want to be, if I don't own any of them, I want to buy some of them, and I want to wait for sort of a correction to step in and get more aggressive on those names. But they're high-quality assets. DoorDash, Uber, Shopify.
What does it take for Lyft to kick into a higher gear and get investors on board?
That's a tough hand that they have right there. So they got, 30% share in the U.S. market with de minimis international exposure. Now they're starting to build it there. And I think in 10 Canadian cities, rolling out into Puerto Rico, they made an acquisition in Europe. So they're starting to do the right thing there. They're working on their AV, autonomous vehicle partnerships. So I don't have any particular idea of something else, something they should be doing differently. The challenge is you're a number two player and a distant number two player in the market where scale really matters. And so it makes them less attractive to AV partners. And it also means, just given the dynamics of the industry, they come up with some great innovation. It's kind of hard for it not to be immediately copied by Uber and vice versa. So, it's the number two, usually hard to make a lot of money as an investor in a number two player.
I mean, some of the travel-related names that have reported in the past, 12, 18 hours are trading higher, whether it's Hertz, whether it's Hyatt. Airbnb is an interesting one to me, too, because it was very positive commentary on the improvement in U.S. demand trends, and yet the stock's seeing some pressure largely due to margin outlook.
I got this one for you, Morgan. So here's the setup on Airbnb. They're going through an investment cycle. They started it in the back half of last year. They started leaning into things like more marketing in international markets. And they particularly mentioned leaning into social media. That means YouTube, and that means Meta. And then they've also rolled out experiences. And it's a great opportunity. So when do we get the ROI on that spend, on that investment? And in the back half of the year, they guided to deceleration in growth and margins coming down. So you got a high multiple stock. People are waiting for them to come out of the investment cycle. It's not happening in the back half of this year. You sell the stock. Now I'm waiting for it to. So I'm on the sidelines on Airbnb. Look, it's a high quality asset, but I need to see that acceleration. If you're gonna be at 26, 27 times earnings at a premium to Booking or Expedia, you got to show acceleration. And until you do, your stock's not going to outperform. That's the knock on Airbnb.